Hey guys, this is Moham, and in today's video, I'll go over how I determine my daily bias. This is my personal method, and I do believe it's the easiest but also the most effective way, only in 4 simple steps. Make sure you join my free Discord, like the video, and subscribe to the channel for more trading content. Let's dive in. So now, going into steps, but before that, we need to know why price moves. So most of the time, price moves because of two reasons. The first one is to take liquidity. The second one is to rebalance a fair value gap. So you'll see most of the time price either goes to a liquidity or goes to a fair value gap. Now, the first step is to identify your last liquidity sweep. So this is the current price, for example. So let's say this is the current price, for example. Where is the last sweep? It is this one. See this sweep right here? This liquidity and this liquidity, they were not taken. Price comes here, take both of them right here. So this is the last sweep, and this is the first step. So as we learn on the 4-hour and the 50-minute strategy, when we have a sweep and price goes back to the range, we can look for a lower time frame entry right here. I mean, the main concept of the 4-hour strategy is to take a 4-hour sweep. Then we look for a trade on the other direction. Similarly here. So this is the first step. The second step is to identify liquidity levels on the other side of the sweep. So the sweep happens on the upside. Now we look for liquidity on the downside. We have this liquidity right here. This one is not liquidity because it's a inside bar. Liquidity right here. You have one here too. And the last one is right here. Obviously we have more, and I think this one aligns with equal lows right here. So this one is the most effective one. Like most of the time I will be looking for this one to be taken, but it's far away from the price right now. So we do have liquidity here and here, but I'm not gonna go that far away. No, I'll stick with the levels that are close to the current price. Now the third step is to identify fair value gaps. We do have a fair value gap here. This one, price is currently trading through this fair value gap. We do have this one too. One right here. That's it. So now, as we said in the beginning, price always will go and seek liquidity levels and will go and rebalance fair value gap. So we see liquidity, fair value gap, liquidity, value gap, liquidity. So for now, as price did a sweep and then goes back to this range, you see, the price comes back here. That means I'm bearish for now. So I can look for lower time frame entries right here, and then I'll only go short. One more thing, and this is the fourth step and the last step, is to use the premium and discount. So let's say for this leg from here to here, this is the 50% level. So above the 50% level is premium, below is discount. So above I can go short but not long. Below I can go long but not short. So this is the filtering thing. So the premium and discount can be used as a filter, so I know when I can go long and when I can go short. So now from here to here, I'll be bearish. Then the price comes down here, takes a liquidity, and then gives me a setup. Then I'll take it as bullish. So basically, it's as easy as this. So for now, I'm bearish until there is another sweep and there is some other liquidity area. And now all of those, this one, this one, this one, this one, this one, they're all take profit targets. And this is one additional trick that you can use to identify more targets and more take profits. So this is the same liquidity that we So this is the same level of liquidity that was swept. This one, see, it was swept here, the one we discussed on the 4 hour. But this method can only be used in the daily time frame. I mean, it can be used in other time frames, but it works the best on the daily time frame. So basically, what we see, we do have the sweep here. Even in the 4 hours, it's the same. There's a sweep. So now what we can do is give the path, start from, let's say, here, from this level. Then we start from the bottom or the low of the candle and take the path to the high of the candle. Then the low of this candle, high of the candle, low, high, low, then high to where we are now. Now, if I hide the pair, let's say here, we do have this level, this swing low, and another one here, and last one is here. Those are previous day's low. See, this was a day candle. This is the low of the day candle. This was a day candle. This is the low of the day candle, and similarly here. So now, if we see how price reacts after the sweep, price will most likely take profit target. Now price takes the first target, second target is taken here, then third target is taken. See, so we can use those. Like if we find a lower time frame entry here, we may use this as a take profit. And then if we have let's say a lower time frame entry here, we are already bearish, so we can take profit here. See? And similarly here. Taking a look at a live example on, so today is April 7th, but now it's weekend, that's why market's closed. But if we look at GU, we can see that we did have the first sweep right here. First sweep happens, price back to the range. So at this point, I'm bullish. Now my daily bias is bullish. So what I would look for is price to fill some fair value gaps as well as take some liquidity. So price is here. The first liquidity we had is right here, was taken, and then the second liquidity is right here, taken here, and then we do have one main fair value gap, which is this one, partially filled, so I'll take it from here. That means I want to see this fair value gap filled. We can see it filled here. That's the first thing. So now I'm still bullish, but I will only go long just at the 50%. When I'm above the 50%, now I'm not looking for longs anymore. Now, if I go and zoom in, we can see that. So first, we're looking for a sweep. That's the first step, right? Now, if I mark this high, we can see that it was swept, but very minor sweep, you know? So, see the sweep? Some very minor sweep, but I'll take it as a sweep. That means sweep, we go below the range. Now I'm bearish. So, what can I target? First of all, we do have this inducement here. So, target. We also have, so no fair value gaps, obviously. We do have this fair value gap here. We can see that it was filled immediately. But this is not a far, this is too close profit, you know? But we do have this liquidity right here, one, and it was taken to. And then, you know, every low of the daily candle is a liquidity. Okay, so now if I have my 50%, I'll take it from, and then yeah, from here to here. Now I'm only looking for shorts here. When price goes below this point, I'm not looking for shorts. Now, what we see is another liquidity sweep. So basically, I was bullish all the way until here. Sweep happens. Now I'm bearish. Now I'm not gonna give up on my bias until there's a sweep. So we do have like some sweeps here, but we can see that okay, price goes up. Maybe I'm bullish here, but then price goes down again. Takes this liquidity right here, this main one. See, price goes back to the range immediately. Now, what does that mean? I'm more bullish. So I'll be looking for some long position here, targeting this liquidity level, or maybe this one, both equal highs. This level, this one, and then some very fair value gaps. This one, the small fair value gaps here, but it aligns with the liquidity. So yeah, and then yeah, basically those ones. And maybe if you consider those as equal highs, this is a perfect target too. Now, if we take this line from here, from this point, the last high, to here, we can see we have a sweep. This goes back to the range. What does that mean? Now I'm switching to bearish. So now I'll only go short on GU. You can go long, but it's going to be a lower probability as well as going to be trading against the trend. So basically, what are some price levels that we may target? We do have this liquidity right here, this pullback. Also have this one right here, then this one right here, and this main low. But I do think price may react from somewhere in here. Or if you look for fair value gaps here, we do have one here, this fair value gap here, and then we have one here, and then we do have one here. This is the extreme fair value gap. And yeah, so now I go to the 50%. So if I apply my premium and discount, we can see that we can go short here, targeting this, this, and maybe this, and then we can go long from here, either this fair value gap or this one. So basically, when I say this sweep, now I'm bearish on GU. That's it. So I think that's it for the video. If you guys like the video and you like this type of content, then don't forget to subscribe to the channel and like the video. And I will see you in next video.